Larry, I want to start with Google. Shares are down about 1% right now. Big jump in spending, decreasing margins. What's your takeaway from earnings?
Well, if you look at Google over a multi-year period, it's almost impossible. I'd say it is impossible for an investor to predict marginal profitability in the quarter. That's how much they turn into cash flow from the revenue growth. And if you look at the numbers over a 10-year period, the conversion of revenues to profitability in the company was probably at the low end, maybe the 95th percentile of observations. And I think you have to bet on regression to the mean, and I think you have to bet on emotions. The conference call was very emotional. I think Ruth Porat, the CFO of Google, basically has the Stockholm syndrome. When she got the job, investors thought there'd be disclosure, and the quarter was really a monument to non-disclosure. Almost every question that was asked, and I think there were legitimate questions, weren't answered. And there were more questions than answers, I think, after the call. Now, the thing that's interesting, we're here in New York City, and Google is still continuing to aggressively invest in facilities and people in New York City. They have a massive number of employees down in Chelsea already, and they're, I think, going to close to double that. As opposed to Amazon, which is now having second thoughts about Long Island City, having met some of the local politicians. So the basic Google business is pretty strong, and when you get these low marginal profitability conversion quarters, the odds are very, very high that they'll regress to the mean. So you look at Google, the basic advertising business was up close to 20%. For a company this size to be growing 5 times faster than the market is just frankly amazing. The advertising works. I see no reason why that's not going to stop, and that eventually is going to convert into profits. So the stock's reasonably priced. I think you have to be very positive on it here.
We've been having a bigger debate about big cap tech here in this hour, and especially about Facebook, with Roger joining us with his new book. Stock is up 19% over the past week. Does it go higher from here? And I guess the bigger question around this existential debate we've been having here, do shareholders, do investors actually care that the business model is coming with issues and has been plagued by scandals?
Well, I just got back from Africa, and I was in some pretty remote areas. And you look at these places, and they have two things in the most remote area. They have a satellite dish, and they have cellular communication. And Facebook in these areas is basically the New York Times, the Wall Street Journal. It's the whole bag of tricks. You can't look at Facebook as a U.S. company. It's a global entity. And
so is that dangerous?
No, I think,
because if this is the one source of information, that information better be good.
I think that eventually the opportunity is going to overwhelm the problem, as most of the time in business it does. I was very skeptical about Facebook in the quarter because I thought the costs were going to be enormous for Zuckerberg to handle this tremendous sociological obligation he has to get this thing right. And the cost turned out to be reasonable, and the revenue growth, it's Facebook, Google, and now Amazon, they're just devouring the advertising market, and unless the government stops it, it's going to continue. So you have a stock that I think is very reasonably priced here, and I would be very positive on it, and I'm kicking myself that I didn't buy it in the fourth quarter, but frankly, I thought there would be too much cost growth. And you know, in this industry, John, when you live in the land of the cannibals, you better understand what they eat. And the cannibals in this industry do not like margin compression. That is a sure way to have the stock go down.
Wise words, Larry Haverty. And Roger, while we still have you, here's my concern. All the issues that you outlined, completely valid, but for every one of these companies, Facebook, Google, Amazon in particular, there are calls to break them up or dramatically change their business practices, but I'm not sure that there's a legal justification based on the way the law is currently set up to do that. Isn't that dangerous? Is the cart before the horse here?
I think it is. The whole thing is incredibly complicated. I didn't set out to do something easy here. I set out to start a conversation with the hope that both the people who use the products and the policymakers would get together and figure out what the right answer is. I think you're right. We're in new territory. The business model in Facebook, the business model at Google, we've never seen this before. We've never seen that kind of mega surveillance. We've never seen the kind of manipulation of attention and potentially of people's lives before. So we may need new things. It may take a while to get that right. But I believe there's real hope. I'm very hopeful in the book, and I provide a lot of insight to people about how to manage their lives while we're waiting for that to happen, how to take care of their kids, and also what they need to do to get policymakers to do the right thing. But John, let us not pretend there is no quick fix, there is no silver bullet here.
There's no quick fix, there's no silver bullet, but you do make suggestions about how this could proceed. What are they?
Well, very simply put, I want to see policymakers. First of all, I believe there's a very rapid increase in understanding in Congress. So I have a very bullish outlook about Congress's ability to regulate, because tech is not as complicated as banking. It's not as complicated as healthcare.
You call out Mark Warner in the book?
And not just that. I mean, Adam Schiff, but I also Nancy Pelosi. The Democrats from the Bay Area are very strong. There are a number of Republicans. There are a number of Republicans who are getting up to speed on the antitrust thing. Josh Hawley in Missouri. And Marsha Blackburn in Tennessee, among others. But the critical point I'm making here is that they understand something has to be done, and they have an obligation to do it. And with users, just take away your attention. Spread your time out. Don't put so much into Facebook, so much into Google.
Roger, very quickly, because I know we've got less than a minute left. You say in the book that you didn't think the Trump victory or Brexit would happen if not for Facebook's existence. Why? Is that because they got people to change their minds on how to vote, or just simply boosted turnout of certain groups of people?
No, I actually think it's more fundamental than that. I think that the country was polarized, but social media over the last 15 years has increased the level of polarization dramatically, because making people angry and fearful is core to the business model. So I think it's that simple, okay? Now, it remains to be seen. We have to investigate the role of the Facebook employees inside the Trump campaign. We have to investigate more deeply the role of the interference from outside the U.S. and exactly how much impact they had. I think we will eventually get the answers to that, but those are not the dispositive points. The dispositive point is the polarization is what really allowed Brexit and the 2016 election to happen the way they did.